What's up guys, Daniel Clayman here. This is going to be a fairly quick video, but I want to show you how to fund your development projects. I'm going to show you how to make it very simple, and I'm going to show you something incredibly unique. So let's go really quick. My name is Daniel Clayman. I live in Richmond, Virginia. I build real estate for a living, and I build software for real estate investors. That's it. That's the whole bio. So we build single family homes, we build townhomes, we build duplexes, we build quads, we build small apartment buildings, as well as mixed-use projects, right? Projects that look like this. This is one that we just broke ground on. But crucial to me being able to do this business and crucial to me being able to scale my real estate portfolio currently to about $60 million, and we have another $50 to $60 million in the pipeline. None of this would be possible without access to reliable, fairly affordable, high leverage funding. So why should you watch this? Any real estate development, unless you just want to do it all cash, you've just got a lot of cash sitting around, any real estate development is going to require leverage, right? That leverage will come from financial institutions, banks, pension funds, but you can also borrow money from high net worth individuals and family offices. There's lots of money out there ready to fund deals as long as they're the right deals and they're positioned correctly, right? So the right lender is going to be the difference maker between you being able to get an amazing project off the ground and one that just sits there and never gets off the ground. It's all about access to capital, and it's all about being able to get leverage, making sure that your cash goes further, right? It's super important. So most of our smaller development projects, anything under $10 million, we typically get funded by local community banks. Whatever market you're in, there are banks, there are local community banks and credit unions that are mandated to lend directly in your market. You deal directly with decision makers oftentimes there, build personal relationships with bankers, and those are great banks to go to fund your projects. We get both construction and permanent financing from them, right? Our construction financing is usually interest only. And then for our for sale product, because we build spec houses and sell them, obviously that loan gets paid off. And then when we build for rent product, typically, not always, but typically we have interest only construction financing that then gets rolled over into permanent financing once the property is built and stabilized. Stabilized just means that we build the property and lease it out, put tenants into the properties, whether they be apartments or commercial spaces in our mixed-use projects, and then that loan automatically rolls over into permanent financing without the need to do a separate refi. That's all great, but the lending environment recently has become a lot more challenging. There's been so much interest rate volatility and uncertainty about the market, uncertainty about the economy, uncertainty about whether we're going into a recession or not going into a recession, uncertainty about what the Fed will do in the future, that the lending environment has become a lot more challenging, and banks have really they've tightened up their standards, right? And they've also just been much more hesitant to lend because they don't know what the future holds, right? I like to say they're clutching their pearls, and they're being very selective about the kinds of deals they're doing and who they're doing these deals with, right? Getting through the door is tougher than ever. But once you get through that door, you've got to build credibility quickly, right? You've got to build credibility with these lenders and show them that you are somebody that they can feel safe putting their money with. So what they care about more than making money these days in times of economic uncertainty, with any lender that you talk to, private lenders, banks, anybody, what they care about the most is preservation of capital. It's not necessarily how much money they're going to make, right? You go talk to a community banker, you go talk to a private lender, you even go talk to a hard money lender. Sure, they like earning a return on their capital, but what they care about even more than that is preservation of capital. They want to make sure that their money gets paid back. And that means they're very careful about who they do business with. So again, establishing rock solid credibility with any lender that you talk to and showing them that you actually understand the market, you understand the deal, and you're able to execute that deal successfully, it's more important than ever, and you've got to establish that credibility early on in the process. So, we built a tool that anyone can use to immediately look like a rock star in front of any lender in minutes. Honestly, I built this tool originally for myself. I needed something that would help me get funding. And then since then, we've made it available to thousands and thousands of clients who have all seen incredible results with it. You can look like a rock star even if you don't have a track record yet. Even if you don't fully know what you're doing, we have training. Even if you're terrible with computers, right? This app, and I'm going to demonstrate it for you in a second, allows you to create a professional lender presentation from scratch in a matter of minutes that makes you look like a seasoned professional. Allows you to establish instant credibility with any lender that you approach. And again, I cannot stress enough how important credibility and trust is when you are asking people for money. They want to know that they're dealing with somebody that understands the business, understands deal structure, understands risk, understands the metrics, understands deal underwriting. Somebody that will pay the lender back, right? So it will allow you to communicate the benefits of the deal clearly, because the other thing that your lenders care about, again, whether you're dealing with private lenders or hard money lenders or banks, in addition to knowing that they will get their capital back, they also want to know what's in it for them. How are they going to earn money? Timeline, what their rate of return will be. And then we also want to make these deals that we are asking for money for, we want to make them as tangible and as real to lenders as possible. Lenders like to lend on real estate because real estate is something you can touch, you can feel. They can drive past the property. They can see the product of your work and the product of the deal that they helped make possible by lending on it. They can see that building go up. They can see that property being rehabbed, whatever. Lenders like to participate in deals because they can touch, they can feel them. They know that they're making a difference in the community. That's one of their motivations, right? So we want to make the deal as tangible as possible for them. And it's going to allow you to secure funding quicker and easier. This has already been responsible for tens of millions of dollars in funding in our development business. Tens and millions of dollars in funding for our clients. It's used for loans that have secured single-family flip funding, BRRRR deals, ground-up flips, and then multifamily build-to-rent. So, and we have so many of these testimonials. I'm going to demonstrate this for you in a second. I'm going to show you exactly how it's done, right? Brian used it on 3 flips that he solicited financing for. Pete Peterson just secured $2 million of private funding to move our business from wholesaling to commercial investment. Clyde Cook got approved for 100% financing from a third-party lender that normally only gives 85% LTV, etc., etc. Right? So I'm going to show you 2 examples. I'm going to show you how to craft a proposal for spec homes, a home that you're going to build and sell. And I'm going to show you how to craft a proposal for build-to-rent apartment buildings. All right, so I'm going to show you a spec home first, and I'm going to walk you through how I've structured this deal in the software. And if you're not familiar with Rehab Validator, we have detailed training. I mean, literally inside the software, there's tutorial videos and every step of the way and amazing support. But here's the simple deal structure. $60,000 is what you're purchasing the lot for. And I've built out a detailed construction budget for the single family home here. And we give you pre-built cost templates that you can use as a guide, or you can build them from scratch. But I've built out my budget here. So it's going to cost just under $250,000 to build. And then the house will sell for $450,000. And I've structured the financing here so that the lender will fund most of the spec homes that we build. I will buy the land with cash, and I will try to buy the land very cheap. And I'm going to bring it to the bank as my equity. And I'm going to bring it at the value of the land, not what I paid for it. That's the beauty of development, right? And again, you can use this for fix and flips also. but I'm keeping this training focused on development. So for development, I can buy this piece of land for 25 grand, but I'm going to bring it to the bank at 60. And that's my equity. And I'm going to get the bank to finance. My construction is 247. I'm going to get the bank to finance almost the entire construction amount, because their risk is actually still low relative to what the house will be worth, which is $450,000. So that's it. That's the whole deal structure. And now I'm going to click on reports, and I'm going to click short-term lender presentation flip, and I'm going to click generate. And this is what the software will create. Let me show you. I can click get unique link here and generate a unique web page for this presentation. And here's what my lender will see. And I can send this to a private lender that will fund my construction, or I can send this to a local community bank. Here's a cover page, and I'm using a picture of a similar house. In our case, we've built a bunch of similar houses in the same neighborhood. But if you're doing this for the first time, you can just either put a screenshot of your architectural drawing in here, or you can put a picture of a similar house to what you're going to build. Right, so I've got my cover page here with my contact information and my company logo. And then I've got my short-term lender funding request here. So here's what I'm showing to my lender. The as-built value of this house will be $450,000. The land is worth $60,000. It's going to cost $247,000 to build. And I'm looking to borrow, including deferred interest, I'm looking to borrow $253,000. But, hey, Mr. Lender, that's only 56% of the as-built value of this home. So I'm showing the lender clearly that even though I'm asking for 100% construction funding, it's actually a very low LTV loan. And I'm paying 2 points and 7% interest, and I expect the money to be outstanding for 10 months. Right? And then here's some pictures. Again, we're using pictures from a similar project that we've already built, but you can pull pictures from other houses on the market that have sold that are similar to what you're going to build. And I'm showing my lender, this is what you're going to earn from interest. This is what you're going to earn from points and fees. Right? And here's your risk. Crystal clear. It shows the lender that I understand how these deals are structured. I understand the market. I understand the numbers. And I'm communicating to my lender the things that they care about. And then I can include a cash flow summary. And hey, here's some comparable sales. So I'm telling my lender here that I'm going to sell this house for $450,000. And here I'm backing it up. Look at this. Here are my comps. And you can see that the average sales price of the comps is actually higher than my as-built value, so I'm being conservative. And then lastly, I'm including a set of pictures called plant finishes, and I'm showing my lender what the final product will look like. This is incredibly effective in getting lenders to say yes. And I can go back here and I've got full deal structure and flexibility, so I can even include lender profit splits here if I want to share back-end profits with my lender. And I can also include construction budget to my presentation. So now it looks like this. So obviously, once I include a 50% profit split here, the lender profits get blown up. I mean, this is just crazy, right? I don't necessarily recommend offering a huge profit split to your lenders, but if you are brand new and you're starting out and you want to get a private money lender off the sidelines, including some profit share in your deal, is a great way to get them to say yes, right? We have an entire deal structuring course that we give you once you sign up for the software. But again, to your presentation, you can include a full construction budget here. And especially when bankers see this, they understand that they're dealing with a professional. Okay? So that's for houses that you're going to build and sell on the development side. Next, I want to show you a build-to-rent apartment project. So this is a 10 unit ground up apartment building. So again, let me show you what we've done here. This is my land purchase price. I've built a detailed budget here. And again, we give you new construction, multifamily, cost and scope of work templates that you can use as a starting point. And of course, there's a deep project management suite here where you can store your bids, you can store your transactions, track projects in real time, schedule projects, even do lender draws. But I want to show you the lender presentations because it's incredibly powerful. So land purchase price, my construction budget. And then I've structured my financing so that, again, lender is going to fund 60% of as-built value, which is just about $100,000 shy of my construction budget. And we can probably push that number higher. And we have separate training showing you how to structure these deals and how to maximize what you can borrow from the bank so that you need less and less cash to bring to the table. I've entered my pro forma here, my 1-bedroom apartments, 2-bedroom apartments, and my projected rents. And the building is going to be worth this much when it's done. So this is what I sent to my lenders. That this is literally what I've used to fund tens and tens of millions of dollars in projects, and so have our clients. I'm going to click construction and perm loan funding, and I'm going to add to this our comparable rentals report because we have rental comps data nationwide inside the software, and I'm going to add my construction budget. So this is what I'm showing to my bankers. The amount of compliments you're going to get on this is unbelievable. Executive summary, right? I'm giving the lender a description of the project and a little bit of a bio on us. So, ground up multifamily development in a growing and thriving neighborhood. This building combines high rents associated with new Class A multifamily and the lower operating costs typically found in smaller residential properties, etc., etc. Right? A little bit of bio on our project, on our company, map of where it's located, and then the rendering of what the building will look like. Here's my pro forma operating income and expenses, fully itemized. And then this is my short-term and permanent loan summary. So here's what I'm showing to my lender. And I can enter a project description here. This is what the building will be worth. This is the value of the land. This is my construction budget, my total project cost basis, and then this is how much I'm looking to borrow, and this is how much cash is being brought into the deal. And that's the short-term construction loan, and then here is the permanent loan. So when the property is built and it's stabilized, this construction loan goes from interest only to amortizing, using 30-year amortization and 6.25% rate, which is right about where I'm borrowing right now as of recording of this video. And I'm showing my lender that, hey, the debt coverage ratio of this loan will be 1.28. And it's going to take us 14 months to build, lease, and roll over to permanent financing. So in order to get construction financing and in order to secure a permanent loan after construction financing, this is what the lender needs to see. And here's a comparable rentals report, rental comps report, right? Lender can literally, inside this link that I give them, they can hover over and see what are the comps that we are relying on to build our pro forma. Here's 1-bedroom comps. Here's 2-bedroom comps. And I've got the ability inside the software to create 3-bedroom comps, 4-bedroom comps, etc., etc. And then here are the planned finishes, and we've pulled this from a previous project that we've done. And again, if this is your first project, you can pull this from listings of similar properties that are being advertised for rent right now. And then here's a full construction budget. And I can generate this with the click of a mouse, and this is what we send our bankers in order to secure both construction and permanent funding for our development deals. And you can use this for a single family, a duplex, a 10-unit, or you can use this for a 500-unit development. We have clients that use this for 200+ unit projects on a regular basis. And it's very, very simple and intuitive. This will if you apply this, this will increase your chances of getting financing exponentially. I promise you. So, if you're watching this video on YouTube, make sure you subscribe. Leave me a comment. Let me know what questions you have about what I've showed you. Let me know what you thought of this video. Use your fingers, type, give me your comments. Obviously share this. And then if you don't have a Rehab Valuer premium account, you can test drive it for 2 weeks for just $1, right? You're going to get nationwide rental comps, nationwide sales comps, pre-built cost templates to scope of work, full-scale professional deal analysis for wholesale, fix and flip, BRRRR, ground-up development, build-to-rent, dynamic lender proposals that I just showed you, and you're going to get the full simple construction and rehab project management suite. Incredibly easy to use, but it's going to save you a ton of time. Right, so go to rehabvaluer.com/try, or there's a link below this video. Again, our clients use this on a regular basis to get financing. Here's just what a few of them wrote. John Morey posted in our Facebook group, "This is why my lender has no issue funding me," right? And he says at the bottom, "First time I did this with the same bank, I was given a huge line of credit just because of my presentation. The bank said it was clear and spoke their language." Right, Kelly just renewed Rehab Valuer for another year. These presentations really impress equity partners. So you can see he prints them out, binds them, and actually brings them to the meetings. They're very easy to create. I don't think there's any other software to compare that compares. And then look, Sterling says agreed, the best, and then Sterling later posted, "Investor loved my presentation, funded our flip. This has to be the most effective software I used in my business. Love it." Spencer has been using the software for ages now. Rehab Valuer has helped me secure over $2.5 million in funds, new construction, BRRRR, etc., etc. Melinda picked up our third property using Rehab Valuer, found the property yesterday, prepared a report, sent it to our lender, put the property under contract, and secured financing in less than 24 hours, right? Glenn emailed me, "Daniel, I've used Rehab Valuer to present my RV trailer campground proposal, and our banker was very impressed, and our funding is on the way." Aaron McDaniel, we helped him with a $4 million 27-unit apartment project, etc., etc. I mean, we've got these testimonials for days because we build a great product. We take incredible care of our clients. We have great support. So, this is everything you get, plus a lot more. It's $1. Take it for a test drive for 2 weeks. You'll immediately get access to tutorials. Reach out to our support. We'll help you with anything you need. rehabvaluer.com/try. All right, we'll see you later.